Hey traders, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Tuesday, June 25, 2024. We are looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? We have, at the end of the day, a rather narrow ranging day. We had a turnaround Tuesday. Market was down yesterday, was up today. Does that count? Sure. Can you do anything with that information willy-nilly? No, you can't. Market tested yesterday's low, popped back up, never got near yesterday's high, a narrow ranging day. We'll take it at face value. So where does that put the daily chart? What is the 30,000 foot view? What's the big picture? She's been eating time off the clock since the gap down after what? After the summer solstice, the tinfoil hat event. That's right. She is going sideways, eating time off the clock in a bearish formation. If you just look at the chart from Friday, Monday, and yesterday, all she's doing is going back and forth in a rather narrow range after a move down. That is bearish/flaggish. For now, what breaks the chain? What changes that picture? What changes the character of that scenario? Getting above yesterday's high, which opens the door to go right back to where they were last Thursday before the tinfoil hat top out. Again, 30,000 foot view, big picture. The trend is your friend. Just because we had a potential turn, albeit could be short term, could be longer, potential turn last Thursday, at least for some kind of a retracement/corrective move/pullback, some rendition of one of those three things. That doesn't mean the market doesn't stay in an uptrend. She's above all the moving averages. The trend is your friend. She's above the trend line. The trend is your friend. She's above the last breakout area in the sequence. We talked about it last night. It's 533.07 still on the chart. As long as she's above all that stuff, there's nothing wrong with this market. On-time situation from a weekly chart perspective, does that mean the following day, the following week is a collapse in the market? No, it doesn't. Does that mean the market could go sideways to lower for a couple, 3 weeks? Absolutely. Does it guarantee? No, it doesn't. It's just one of those things, a tool in the toolbox that we use, and I say we, inside the number members, live room members. This is one of the tools we use among other things. It begins to build full stack situations. We had an on-time situation from a daily chart. If you've taken the course, Lazy E-mini Trader, you look at this and you say, by golly, yes, it was an on-time type of situation. And then you issue it a funny how that works. Doesn't work 100% of the time, but by golly, it works a whole lot of the time. By golly is a technical term. And by the way, flipping back over to the weekly chart, is she anywhere near the weekly chart 20 moving average, home base? No. Does she have to come back to the 20 period moving average? She doesn't have to anytime soon. She will eventually. That doesn't mean the 20 can't go up farther, just as it's been going from lower left to upper right. That could continue for quite some time. The trend is your friend. The weekly chart trend is a stronger trend than the daily chart trend. A monthly chart trend is a stronger trend than a weekly chart trend. That's the way it works. The larger the time frame, the more dominance it has. Mrs. Market is dominant. What happens when you go to a 4-hour chart? Does it change the picture? Well, it doesn't really change it, but it expands it. As you can see, we had 3 days where we were making a bearish, flaggish pattern on the daily chart. The last few days from Friday, Monday, and today. Okay, fair enough. You go to a 4-hour chart and you say, hey, wait a minute. This is a longer bearish, flaggish situation. So maybe, just maybe, a shorter time frame is at maturity, if you will, and ready to / make a move. Tomorrow, the 4-hour chart will be in an on-time type of situation, won't it be? Same thing when you look at a 2-hour chart, it's making a long-ish, bearish, flag-ish pattern. 4-hour chart riding the 20-period moving average, 3-hour chart riding under the 20-period moving average, 2-hour chart under the 20-period moving average, 1-hour chart under the 50 over the 20 as they cross over. You could see that things morph when you go from shorter time frames to longer time frames, vice versa. 30-minute chart, convergence of moving averages, natural garden variety resistance. 15-minute chart, same routine. They're into all these moving averages. It's decision time for the market. Are they going to be resistance? Is the 4-hour chart going to play out from the bearish, flaggish standpoint? Or is something else developing where they start getting above all these short-term moving averages and get back into a rising trend, rising tape, rising tide lifts all boats type of situation? What about numbers? Where do you get those? How do you find the important numbers? Well, that leads me to inside the numbers. What you're looking at here is the early morning 0 dark 30 commentary. And I'll just highlight a few important things, including Championship Monday. The Florida Panthers took home the Stanley Cup, while the University of Tennessee baseball program are the College World Series champions. Congratulations to those two organizations. These are no easy feats. They get to hold that title until next year. We have our pivot, our early pivot today at 5:44.25. Let's start there. 5-minute chart, SPY, right of the vertical line is today's activity. You could see the importance of the pivot, 5:44.25. We had bull-bear battles, one in the morning, one in the afternoon. We had resistance in the morning, and we had support at the end of the day when she was above, coming back to retest it before the closing bell ricocheted off. It was important all day long. Above opens the door for 546. Staying below opens the door for some other stuff like 542.30, 540.90. They never got up to 546 and they never got down to 542.30, at least in the regular hours session. But wait, there's more. Almost got down there this afternoon, but this includes the pre-market data. So let's go to an hourly chart so we could see it a little more clear. They did it after the close yesterday, right after the closing bell. And then you could see they rode it every time they came down in that area. They never touched it again, just after the close yesterday. Do we read into that information? Well, we don't necessarily read into it other than to say that's got to be important information. We're going to file it away. It's some kind of puzzle piece. It's on the table from an important spot perspective. That's why I was focused on it today for the live room members and inside the number members, knowing that that should be at least the top end of a support zone. They never got there today, fair enough. Remember, pause the video, read the notes, go back to the chart, and double check the work. All in all, they never really went anywhere. They hung around the pivot, little bit back, little bit forth, never got down to my buy zone, never got up to my sell zone. We had some trades in the live room. We had some traders that traded around the pivot today. That's fine. We talked about it in real time. It just wasn't something I was doing, but that doesn't mean it's not for everybody. The pivot is important. Coming up with the morning pivot is part and parcel to our morning trading opportunities. To the pivot, from the pivot, knowing where the pivot is, that's essential for our morning trading activities. You have to have the pivot every single day in order to be successful, at least in my opinion, in the morning trading business. Do you have the pivot every single day? Pause the video, read the notes, go back to the chart, and double check the work. You're going to hear the same stuff over and over in here. They're in no man's land. They're not going anywhere. 544.25 is the pivot. Here's support. They never got there. In between is a chop shop formation. Again, pause them, read them, go back to the chart, and double check the work. It's all in here. They just didn't do anything. We're in the summer doldrums. That doesn't mean every day is going to be like this. It means that some days are going to be narrow ranging days, lighter volume, lack of participation, which makes for a non trader type of tape. You take it at face value. But we have other stuff to trade. What about Solar Edge and SPR? What about S? Should we take a look at these particular stocks on the move today and see what happened? Before we get to stocks on the move, let's make mention of a couple of trades that happened in the live room in real time. 182 was a buy level in Tesla today. The low happened to be 182.01. We talk about splitting hairs over pennies. That counts. Sometimes they come up short. Other times they spike them through. We were talking through this one in real time. We had plenty of traders that took this rocket ride in Tesla today. 182 was the buy price provided before Mrs. Tesla got to 182. Nice trade. Since we're on the subject of live room trades in real time, 157 was a number in AMD. Traders in the live room knew it for a couple of days. Came into 157, bounced off 157, provided the day trading opportunity for those waiting for it. Another nice trade. There's money being made in this live room, folks, inside the numbers live. If you're in that room, help a brother out. Post it under the video. Let traders out there know if you're having success in the live room. There are plenty of traders out there looking for help. They don't know where to find it. Everything looks like a scam. If you're having success and you're learning in the live room, tell other traders. Help a brother out. Back to stocks on the move and Solar Edge. 2670 was the first number on the board. They came up short. They hovered over it, came into it later in the morning and dripped lower through lunchtime and in the afternoon session. This is not what we're looking for. We're looking for the one here that comes into the number early during the morning rush, painting by the numbers. We don't want the dripper. We don't want second time, another bite at the apple. We want first time, best time. We don't want them to come up short and trade away. We want them to come straight in. These are some of the parameters of how we quote unquote paint by the numbers. So this one really didn't do the deal in the manner in which. This one, similar to same deal, came up short, had a nice trade away, but coming up short precluded us from the trade. If you're painting by the numbers, they came up what? Here's the low of 31.26 against 31.16, a dime low. And then guess what? The next candle, you're at a high of 31.90. So they certainly gave you well in excess of the minimum required base hit, but came up short. So do we want this later on in the morning after they came up short? And the answer is no, you don't. You could see here the number worked. It's just the manner in which. Fair enough. Spirit arrow. Similar situation yet again in SEC Limited. Opened below the first number, so it's technically off the table. Never got to the second number, came up penny short, rocket ride back above the first number and took off. So technically speaking, the zone worked, but the manner in which did not. Therefore, we're just going to call these off the table, no harm, no foul. Now, what's going on over in Camp IWM? Below all the moving averages, trend is your friend. However, there's always a however or a but wait, there's more. So we know she's bearish under the convergence of the 20, the 50, and the 100 period moving average. Fair enough. But off the recent low, and when I say recent low, I'm looking down here on Monday the 17th, so it was a week ago Monday. After that low, she's been eating time off the clock in somewhat of a sloppy but flaggish formation underneath the moving averages. Is this setting up for a move higher? Well, it's either setting up for a move higher into and above the moving averages. That's item number one. And if they do that, might want to get out your sticky notes and pen, because if she did that, the target, write this down, would be 203.75. Write that down, 203.75, Camp IWM. Now, what happens if that doesn't happen? What would cause that not to happen? Well, very simply, they can't get above these moving averages. This is not going to work out as a bullish, flaggish, eating time off the clock formation heading up to 203.70, and they're going to break this low down here. The low is 240, and if they do that, there's some unfinished business and some numbers down below where inside the number members will have those numbers in real time in preparation to do what? To trade them. The IWM is my favorite market leading indicator. It's still in a different position. Here's the weekly chart than the S&P, the Dow, the NASDAQ. You see here below the 20 week moving average, but you do have a series of higher lows. However, below the 20-week moving average, she's in a teetering type of situation. Time will tell. Is the summer solstice going to produce more of a sell-off before a new low is found and another leg higher? We don't know yet. One day at a time. We're using last Monday's low in the IWM as our what? You got it, as our bogey. What about team transports? Down 120 points today again. My second favorite market leading indicator, a number one canary in the coal mine. IWM was down about 1/3% today. Transports were down about 2/3%, 0.75%, somewhere in that neighborhood. Below all the moving averages, trend is your friend. Below 3 out of 4 moving averages, trend is your friend. The trend is lower in the transports. You go to the weekly chart and say, look, they got a convergence of 20 and a 50-period moving average above current price. Certainly, they can get above that. They can go to the top of this channel, this triangle. That's fine. But here is overhead resistance, certainly on a weekly chart. They've been below it for 6 weeks. That's resistance. Above it is bullish, and above it will open the door to the top trend line. Here's a better picture of the triangle. When time is up, they can test the bottom, they could test the top, but once they break out or break down, and they don't have to get to the end, but once they get to the end, one of those two things is going to happen. Doesn't have to wait until the end. They're either going to get below the low or the lower trend line, or they're going to get above the upper trend line, and they're going to go. It's either resistance, support, it's either break down or break out. This is the monthly chart. These things take time. This has several more months to go to get to the end or apex of the triangle. And keep in mind, once again, they don't have to get to the end, but this is what is developing. This is the pattern. This is the thing. Now, what about the Q people? Up over $5 today, over 1%. Anything wrong with the Qs? Absolutely not. What did they have? A 3-day pullback and then a pop? We're focused in the weekly chart. Yes, you have a tail last week. Yes, it was an on-time type of situation. Yes, they're still hanging around in the same general spot. The market is bullish until it's not. You're above all the moving averages. You're well above the weekly chart 20-period moving average, and you're coming close to, in the neighborhood of, have worked off the overbought / extended condition, if you will, on the daily chart. The trend is your friend. As long as she stays above all the moving averages, this is an uptrend. Coming back to pay a visit, even in the ballpark / neighborhood of home base, the 20-period moving average. That's just bullish unless she collapses back down and gets below and starts trading below what? The last breakout area, all that stuff. All charts act and react the same way. On-time situation applies in the Qs. It applies in the S&P. Just the same. What about the XLF, the financials? Anything going on here? Just look at the daily chart and you say, you know what? They recaptured all the moving averages. They're hanging out. They're going sideways for a few days above all the moving averages and technically above them. Trend is your friend. We know how that works. So there's nothing wrong with the financials. Weekly chart, above all the moving averages, same routine. Last couple of weeks, came in to test the 20, got below it 1 week, right back above the next week, staying above this week. Nothing wrong with the financials above the 20-period moving average or home base. She goes back, she goes forth. Markets go down a little, they correct a little, they go up a little bit, they rally a little, they consolidate a little. There's nothing wrong. There is exactly what markets do is what she's doing. And for that matter, same goes for basically all the other markets. Case in point, smash mouth. Down day yesterday into the 20-period moving average, bounce off the 20-period moving average, take back the loss from yesterday basically in its entirety. Above all the moving averages, you can finish the sentence. On-time situation, sign or signal of a trend change, tail candle, all that is there. It doesn't guarantee anything. It's information. We're watching. We're watching for further development. You get below the weekly chart, breakup candle low. We discussed this last night, 250.85. You can call that low is 250.05. That would be bearish. The 250.85 is the last breakout area on the daily chart. The 250.05 is a weekly number. that zone down there is bona fide support if visited. Keep in mind, first time, best time. Write that down, put it on a sticky note. If I told you how much I appreciate each and every one of you, without you, these videos are not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.